On the Fox Certified Money Watch this morning, it's tax time. And did you know that you can actually get a tax break for saving for your future? Joining us this morning, Bert, the Oracle of Orlando from Certified Financial Group. Joe, good morning.
Morning, Tom.
You know, you and I were just chatting about why it's so important to save for your future, and there are still a lot of people that get caught by this when it comes retirement time.
Unfortunately, many people don't think about it until they get in their later years and they're facing a retirement. You know, that last leg, as I call it, maybe from 50 on up to 65, and they're thinking about, okay, what's going to happen? Where do my paychecks come from when I retire? Most of us will have Social Security, but if you don't have more than Social Security, it's not a pretty picture.
Yeah, and like my parents, my dad retired with a pension.
Yep. And
pensions have gone the way of the dodo bird.
You got that right. In fact, look what's happening in the state of Florida. Big discussion right now what we're going to do with state employees. Are they going to have a pension, or are they going to go by way of what's called 403B plans, 401k type kind of plans, to force them to save for their retirement? So many employers today are eliminating the pension. So if all you have is Social Security, all you're going to have in retirement is what you save in addition to Social Security.
All right, so let's talk about some of the tax breaks. If you are doing what you should be doing and saving, it actually helps you, right?
Oh, without question. The government recognized about 35 years ago when they established 401ks that unless we save for our retirement, that's the only thing we're going to have. So you get the 401k, number one. If your employer has that, you definitely need to use it. Right off the top, you get a tax break because every dollar you put in is not taxable to you, so you're saving anywhere from 10 to 39.6 today. Or an IRA. If your company doesn't have a 401k, use the IRA. In 2012, I should say, you're permitted to put in $5,000 on a pre-tax basis. And I want our listeners to Google Savers Tax Credit.
Okay.
Because if you're single and have an income of $29,500 or less, the government's going to give you money. And if you're married, filing a joint return, and if your income is $59,000 or less, the government's going to give you money if you put money into your retirement plan.
You know, I have to be honest. When we talk taxes, I think I get like a lot of other people sometimes kind of get a glaze that comes over my eye.
Well, do yourself a favor and Google Savers Tax Credit, because there's money there for you.
How important is it to have someone do your taxes for you? When do you need to go from I can do it myself to I need somebody to do this for me?
Well, it all depends on your personal situation, how complex or straightforward your situation is. I would get one of those computer things, the TurboTax, go and use it, but you have to understand the questions that they're asking. And maybe it makes sense to have a tax preparer, a legitimate tax preparer, do it for you 1 year, and then you're able to follow that pattern in subsequent years. That may not be a bad idea.
But still, as you always preach, do your homework.
Oh, you got to do your homework, and you have to do planning and understand what those benefits are. Please, 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 if you are working, use your 401k. If you're not working, at least do an IRA, because what you're going to have in retirement is only what you're able to save right now.
Joe, great advice as always.
All right,
See you next time.
Good to see you.
All right.